Okay, let's continue with your chapter 3. Okay, now this chapter we're going to talk about non-business income, yeah? So which means section 4B until section 4F, alright? So the income that included in other income, which is not business, okay? Non-business income. Now first one, we're going to discuss about dividend income. I think class, you know what it means by dividend, right? Yes. So which means you invest your money in to buy some shares in a company, and when a company earning a profit, they distribute the dividends, correct? Right? So you will become the shareholder already. Okay. Now, so when you receive the dividend income, is it subject to tax or not? Okay. Generally, the dividend represents the distribution of the profit, blah blah blah. Okay. And under this section 4C. So dividend income received is chargeable under the Income Tax Act. Okay. Now, just by the way, after 2013 onwards, okay, so all the dividend will be paid out under single tail system. I think you heard about that before, right? So I told you that single tail system exempted from tax. Correct? Okay. Let's see some history before. Before this single tail system, how they're going to charge the dividend? Now, so here. Under imputation system, can you see in bracket I mentioned up to what date? 31st December 2013, which means this is the last date for imputation system. This is the old system for dividend. Okay, later I will show you the calculation, how they calculate dividend income under this imputation system. Alright, this is the old one. Okay, then continue. Now look at another one that I highlight in bold. Can you see under single tail system? Then this is with effective from when? Start from 1st January 2008. So in the class, you see the time frame. If let's say a single tail system start from 1st January 2008, and then okay. Now and then the imputation system is up to the 1st December 2013. So let me draw you a timeline. Give me a minute. Okay, let us. This is the date whereby the single tail system start already, right? From this date onwards. But this date is actually the date where the old system, the imputation system, stopped. Correct? Now, so you will realize that actually, from this period, the date before 1st January 2018, they actually run for imputation system. Okay, the date before 2018, from here to here, they actually run for imputation system. Okay, and then after 31st December 2013, imputation system is stopped already. So then after this, in this period, they will run single till system. Then how about the period in between here? Both system also is implemented, right? So, but just that some companies, they actually start from 1st January 2008 onwards, when they introduce the single till system, they give a choice, they give some transitional period to the company. So slowly you change, right? You change yourself from imputation to single till system. So which means from 2008 until 2013, this is a 5 years transitional period given, right? But up to 31st December 2013 onwards, you are compulsory to go for single till system already. Okay, so after, which means since 2014 onwards, the old system no longer there. Okay, so now let's see what is the old system going on. Alright, so this is actually transitional period, the 5 years. Okay. Right, go back to our notes. Now certain points I need you to highlight. Yeah? Let's see the old system first. Now under imputation system, the dividend received under this, the tax paid by the company is not final tax. Now, and tax paid by the company is passed to the shareholder as a tax credit, section 110. So, which means actually when the company earning profit, company pay tax, correct? And they distribute the profit to the shareholder. Shareholder pay tax also. This is the meaning of imputation system, right? So they say that company, the tax paid by company is not final tax. Shareholders still need to pay. Okay. Now, but under the single till system, actually, the tax paid by the company is considered final tax already. This is the first difference. Alright, so you can highlight this. The tax paid by company is not final tax. Okay, and then for single till system, the tax paid by the company now is final tax already. So, and the tax rate for the company every year will also change. So this percentage in here, I give you an example. All right. In some, in a few of the year, the company tax rate is actually 25%. Okay. So, but depends on when actually it changed. Okay. Next. The next difference is, now the shareholder will receive the net dividend considered 75% after the tax deduction of 25%. They will assume that the amount received by the shareholder is after the tax amount, after the 25% tax already. Okay, and the taxpayer required to declare gross dividend income. Okay, you must declare your gross dividend income under the old system. But under the new system, taxpayer not required to declare the dividend income. So this is another difference. Okay, so which means under single till system, dividend is exempted. So you can highlight another keyword in here. Alright, under the single till system, tax exemption. Okay. Alright, generally this is the difference between these two systems. Now, and let's try a question. Now, when I show you the calculation, you will understand better. Alright, let's see the example one here. Okay, now example 1 is about an individual named Pamela. Pamela received the following income in YA 2013. Now why I put in on YA 2013? Because 2013 are still the year whereby the two systems run together, right? So the company still have a choice to choose whether you go for imputation or whether you go for the single tier system. But after 2013, it's compulsory everything go for single tier, alright? So that's why I choose the example for 2013 here. Now this individual received the salary income 10,000 and received a dividend also. Received the dividend amount is 75,000, and normally the dividend received amount is considered after tax of 25% already. That's why in bracket I say net of tax at 25%. Okay. Now so required. Compute the tax payable for Pamela in 2013, assuming the personal relief is 9,000 under the imputation system and also under single tier system. So you have to calculate what is her tax, right? If let's say under these two systems, because she received dividend, right? So let's prepare the computation in two columns, right? So we answer for A and B. I show you the difference. As usual, we always mention the taxpayer name first and followed by our title. This is our tax computation for the YA 2013 for this Pamela. Alright, and I need two columns in here. Right, so this is part A, imputation system. And this one is part B, single tier system. Okay, so class, still the same. We will actually follow the treasury burden format. Okay, so to calculate the tax amount. So first of all, this individual do not have business income, only earning salary, only earning dividend. So you will start the computation for from the non-business income. Okay, salary is under employment income. Okay, and then dividend income, also under non-business income category. Okay, we do it for imputation system first, the old system. So fill up the figure, salary. She get for 10,000. And the dividend. Alright, under the old system before, right? The dividend income you need to declare, right? Which means the income you have to add in here. But make sure that you add in the gross amount. It's not the net amount, yeah? So net dividend she received is 75,000, right? Consider after tax 25% already. So how you regross back the amount? You will get net dividend 75,000, right? And you divide by the net dividend percentage, 75%. Okay, 75,000 divided by 75, and you times 100. This is how you regross back. Okay. So net dividend 75,000 divide by the percentage of net dividend, 75, because 100 minus 25% tax, right? So 75%. And then now you have to times with 100, because I want gross amount, the amount before deduction. So how much you get? 100,000. Okay. So this is the total income for this individual, 110,000. Okay, after this, you do not have any other information, then we will continue to minus. Yes, personal relief. They said assume at 9,000, right? Okay, so you follow 9,000. This is your chargeable income. Okay, let me show you the tax rate for 2013. Let's check this one. Now, I think you know how to calculate the tax, right? Now, according to the chargeable income for Pamela, 101,000 chargeable income, right? So, and this is actually the tax rate in 2013 for Malaysia. Okay, so let's check chargeable income 101. Alright, you are forced under the last category in here. Okay, so try to calculate yourself. How much will be the tax? So this is actually, the first column is the taxable income, which means chargeable income, yeah? And then second column is a tax calculation. Third column is actually the percentage, yeah? Last column is the tax amount. Now, so which means, on the first 100,000, we charge you 13850 tax amount. Any balance, 26%. 1411. Okay, so you will actually write here as this. First 100,000, 13850. Okay, the next amount means from the chargeable income after the 100,000, yes, balance 1,000, and you will times with 26%. 260, right? Okay, so in total?
14110.
Okay, so this is the total tax amount. Okay? Alright, up to here, we already declared the dividend income, 100,000. So we subject to tax 14110. But under imputation system, you will have one more step to go. Now we're going to minus something from the tax liability here. Now remember class, just now actually the dividend amount, right? How much Pamela received? 75. But how much we declare here?
100,000.
100,000. Where is the difference of 25,000?
The percentage.
It's actually the tax, right? Remember we said that we will assume that 25% is actually paid for tax. She actually received 75,000 only. Understand? So now we declare the income for 100,000, which means the 25,000 will be assumed that the tax already paid. Understand? So now we can deduct from here. Okay? The tax that already paid. So actually this is the relief under section 110. Okay? You can check again your notes here. Under the imputation system, now can you see that here I mentioned a tax credit section 110? That's why the tax paid by the companies, right, will pass to the shareholder as a tax credit, which means as a tax credit that they already paid. Alright, so this is actually the tax credit section 110. So 25,000 will be deducted here. Okay? You know where I get this 25,000, right? The tax amount paid. Okay, final tax amount, tax payable. Alright, answer class. Now this is the amount. Tax payable, or if let's say this is actually in bracket, negative amount, then this will consider as a tax refund. Alright, the tax owing to the government, or either the government owing to you. So in this situation, the government still need to pay her back 10890. Now this is the old system, yeah? Okay? Now class, let's review that for single tail system. Now the new system, how actually is going to look like for the tax computation here. So same thing, we should start to fill up the non-business income in here. So she's still earning 10,000 salary, alright? So we will see what is the tax amount if let's say the dividend is under another system, which is single tail system. Now salary no changes, okay? You still need to add on 10,000. So but for the dividend income in here, remember just now we already highlighted under single tail system, this is the income exempted from tax, correct? So basically here we will write exempt, right? It's already exempted from tax. Okay, under single tail system, the dividend exempted. So total income for this individual, 10,000. And the personal relief will remain the same, 9,000. So the chargeable income for this individual, 1,000 only. Okay, then let's we just calculate for the tax liability. Refer back to the tax rate. If 1,000 chargeable income only, what amount? Yes, the first 2,500 ringgit, is it zero tax? Alright, so we just write here, okay? Just write after the tax amount just now. First 2,500. Okay, and the amount, 0. Alright, answer class, this is the answer. Now class, if you compare these two amounts, right? Okay, the individual received totally the same income, but just that the dividend under the two different systems. Okay, actually look at here. What difference you can see? Single tail system earn income, but no need to pay tax. How about imputation system? Still need to pay, or actually get back refund?
Get back refund.
So actually for this situation, in this situation, for this individual, which one is better? Yes, earning the same income, somehow the government will refund you also, correct? But of course, indirectly to say that this is not good for government, right? So that's why actually this system is no longer there already. So imputation cannot already. Okay, so now onwards. So now you study for the rules for 2018. We all go for the single tier system already. So but at least we just show you the difference. Okay. All right. So next, now this is supply on the individual. Then how about the company? Example 2. Okay, now example 2 is about a company X. And company X has an aggregate statutory income 12,000. They receive a dividend income 8,000, gross amount, and interest income is 8,000. So and then the unabsorbed loss brought forward from 2012 is 4,000. Okay, same thing also. They want you to calculate the tax payable by this company under these two different systems. Okay? So assuming that the paid up capital for the company at the beginning of the business period is 2 million. Now why actually they give you this information? Because the company tax rate will depend on how much is your paid up capital. Alright? So look at down there. Can you see I give you the company tax rate for 2013? Alright, if the paid up capital at the beginning of the year of assessment is less than 2.5 million, then the first 500,000 you charge for 20% only. More than 500,000 you charge for 25%. But if you are the large company, right, which means your paid up capital more than 2.5 million, you charge for straight away 25%. Okay, you are not entitled for the preference rate for 20%. Okay. Alright, let's prepare the computation also. Now, company X. So we need to calculate the tax also. So the tax computation for the YA 2013. Same thing class, I will need 2 columns. The information given. Company X has an aggregate statutory income, alright, which means they already combine all the business income together. So let's just start from here. Okay, all the statutory income from business. So same thing we fill up for imputation system first. Okay, you have 12,000. And continue. If you according to the chargeable income format, next step you will minus business loss brought forward. How much is the loss brought forward from the question? 4,000. Okay. All right, and continue. We will add non-business income here. Okay, for the company, this company earning other income as dividend and also interest. Now, but we will only record interest income in here, okay? Because the company the computation format is slightly different. Dividend, they don't add in here. They add in after total income. All right, so we only record interest here. The amount is 8,000. Okay, when you add up together, you get 16,000. Okay, business and non-business income combined, you will get aggregate income. And next, of course, you will minus the current year loss, approved donations, and some other deduction. But I think don't have here, right? So you can also say that this aggregate income is also the total income for the company. Okay, no deduction. Now, and continue next step. Okay, so now dividend income we add on here. Same thing also, class, under imputation system, the dividend must be declared under gross amount, okay, before any deduction. So check, how much is the gross dividend? Is it already give you the gross amount? All right, 8,000. Okay, so you fill up here, 8,000. So now class, you see that under imputation system, we need to declare dividend amount, yeah? Okay? So, and subsequently, you will get this as your chargeable income. Okay, and calculate the tax liability. How much is the paid up capital for this company? Paid up capital for the company at the beginning of the year? 2 million. So if 2 million means this company was subject to which tax rate? Okay, the first category in here, right? If the paid up capital less than or equal to 2.5 million. Okay, so on the first 500,000, okay, you charge at 20%. So the chargeable income amount, how much just now? Only 24,000, right? Okay, so this 24,000, of course, was subject to 20%. Okay, you just times 20% here. So you will get 4,800 tax. Okay, and also don't forget, under imputation system, the shareholder, all right, so those who receive dividend, you are entitled to claim a tax credit under section 110. Okay, consider as a tax you paid already. And how you calculate for this amount? Gross dividend amount is 8,000? All right. And previously, they always assume the tax amount is 25%. All right, so you times 25%. This will be the tax paid. So you get 2,000 here, right? All right, so this is a balanced tax payable for the company to pay. So imputation done, okay? So same thing again, you can see that shareholder will declare the tax, shareholder will pay the tax again, right? So, but under single till system. Now maybe you can try yourself. Okay, now class, look at this date of payment. Now the dividend will be assessed based on the dividend payment date. But of course, actually now we already go on single tier system, right? So no need to declare dividend, correct? Not? So the date seems like not so important already, okay? But you still need to know about that, right? So how we actually determine the dividend date is actually paid based on dividend payment date, all right? So you can highlight this one also. Alright, and then continue. You look at example 3. Now see, they give you few dates here, right? So now let's assume LM Berhad inform you that about the following dates. Okay. So annual general meeting to approve the dividend payment, because normally the company want to declare the dividend, they will actually have a meeting first, right? Okay, so for the meeting approve the dividend payment is on 1st November 2017. And also class, you make a remark here. Let's assume this company year end. Okay, company year end on 31st December area. Okay, just add on a note here. Okay, let's assume the company closing the accounts, right, on 31st December area. So now the meeting already done, already approved the dividend payment. This payment must be paid out already. So come to 31st December 2017. Now this dividend will become payable, which means a liability, okay, for a company, because up come to the year end, you need to do some balance day adjustment, correct? So this will become your liability. So and finally, the paid out the payment is actually on 14 February 2018. So far, can you see 3 days related to the dividend also? So meeting to approve the dividend recorded in the accounts as liability, another date, and an actual payment you paid out is another date. So which is actually the year of assessment to declare the dividend income. You will still write in the computation as exempted income, correct? So then which year of assessment you should record this income, this exempt income? You are always based on payment date, am I right? Yes. So the payment date is on?
14 February.
Yes, 14 February 2018. And how about the year of assessment? Okay, yes, 2018. So dividend is accessible based on payment date, which is 14 February 2018 in this case. Okay, and so the YA to declare the dividend income is YA 2018, because company closing on December, right? Okay, so this date 14 February 2018 will fall into the basis period in 2018. All right. Okay, so and this is the answer for example 3. Okay, and you go back to the notes again. In your page 13. Okay, now actually class, all of the non-business income, right, if you actually spend some expenses, right, which is related to your non-business income here, actually you were allowed to deduct, right? So, but just that nowadays the dividend already become exempted, correct not? So the deduction of the expenses here, so they will say that any deduction of the expenses that incurred in relation to the tax-exempt dividend income now shall be disregarded, right? For the purpose of ascertaining the chargeable income. Now, of course, when let's say I actually invest my money into the company, right? I buy the shares, so I earn dividend. But actually, all my money is actually come from a loan, right? I finance a loan and then I invest into this company, let's say. So I will incur loan interest, correct? So this is seems like expenses that are incurred to earn my non-business income. Am I right? So this will be actually deductible. But just that now onwards, dividend already become exempted, free from tax. You get what I mean? So that's why all the expenses that are incurred for this dividend income should be also disregarded. Understand? Income not taxable, definitely expenses also not deductible. It's always fair enough. Okay? So that's why the deduction here we can ignore. Okay? And the exempt dividend, now other than single tail dividend, some other dividend will be actually also exempted from tax, especially some dividend that is from the exempt income account, like certain company, they're actually getting a tax incentive, right? So which they're entitled for like pioneer status. So which means no matter how much profit they earn, they will actually also exempted from tax. Right, that is the tax incentive given. So all those the company not subject to tax, the dividend that they pay out, of course, also not subject to tax. Right. So the dividend paid by paid, credited, or distributed to a member of cooperative society, dividend from the Labuan offshore company. Labuan is actually a tax-free zone, right? So you have those company in there is offshore company. Then the dividend from the company paying under single tail system. So all this exempted from tax. So basically, I think generally all of the dividend in Malaysia already exempted. Okay? And that's all for the dividend income. Now class, dividend income is under which classes of income? Section 4? A, B, C, D, E, F. C. Actually in here, on top here, I already mentioned to you also, right? Yes, this is actually under section 4C. Okay? Alright, dividend income we done, Any questions so far? Now if no question, let's look at another non-business income, right? Which is commonly tested in the question. Again class, dividend, interest, right, all will be under section 4C also, okay? Now first of all, let me ask you something first. Class, how we will earn interest income? Those the interest income is from where? Loan interest you pay, right? Not income. Interest from bank, like all those you say saving account, fixed deposit account, whatever. Okay, other than that, can we earn other interest income? Sorry? Leasing. Which means you actually paying the interest or you receive the interest. Leasing is actually the rental, right? Okay, similar to rental. Not really. Other than that. Sorry? Stock. How you earn interest from stock? Investment. Investment basically depends on what investment you invest. If let's say you invest in like bond fund, shares and so on, you will get like dividends and so on, right? Okay, the bond interest. Okay. Other than that, you borrow money to others. Okay, all right. Can say so. If let's say you charge the person for interest, okay, then you will receive interest. Lagi? Lagi apa? Class, usually when you're doing a business, right? When you run a business, you sell your stock to your customer, correct? And definitely you will give them a credit term, right? Let's say 30 days or 60 days. So let's say I give my customer for 60 days credit term. Now, normally some of the customer, they're very bad paymaster one, right? So they always delay payment. So maybe 90 days, 120 days, even half year only pay me. So if let's say I want them to pay earlier, I might take some action, right?
Yes.
So any outstanding amount more than 60 days, I will charge interest. Will we receive interest income now?
Yes.
Yes.
Yes, this is also another kind of interest. But of course, in the real world situation, I don't think so you can simply to charge a customer for the interest. Because why? They will feel unhappy also, right? And then subsequently what happened? Then I don't want to do business with you, lor.
Yeah.
Correct, right? So have to be careful also on that. Alright, so this is also some few of the interest income example. So look at this one. Now actually, interest will be accessible to tax if let's say the interest income is forced within investment income. So if let's say this interest income is investment income, then you will actually record this income in the chargeable income computation under the non-business income part, right? So actually class, to determine business or non-business income is important. You know why? If let's say this is the business income, alright, then this income will be included in here. Because why? This is section 4A, business income. Boleh faham? If let's say this is business income, they're included in here. Okay? So, and if let's say they are under investment income, then they will fall under here. Get what I mean? So that's why actually you need to differentiate whether this is non-business income or business income, because they will have a different calculation in the format, right? Either in the part on top here or either in the part here. Okay? Alright, so interest normally will be under the investment income. If let's say that is not related to business and related to investment. But however, okay, so now read on this one. Now, however, from 2013 onwards, interest income will only be assessed as business income. It's possible that maybe you will assess the interest income as business source if this situation happened, right? If the interest is actually derived from a source which form part of the stock in trade of a business, which means you selling your stock to customer owing the money for the stock, you charge interest. That is related to business. Get what I mean? So like just now the example I told you, so interest you charge your customer is business income. Alright? It's not investment income. Okay? So it will be falls under business income category. Or another situation, what if let's say my company is actually a bank, a financial institution. Normally, I lend out the money to others, correct?
Yes.
And definitely, is it I charge them interest?
Yes.
And this interest income is investment or business?
Business.
Business income, right? So that is actually the second situation. Interest received by a person from the business of lending money. But of course, in Malaysia, you cannot simply to lend money to others to work as a business, right? You must get a license, okay? All right. Other than that, the interest from your saving income, from your bank, from your fixed deposit, whatever, all that will be considered investment income. Okay? Alright, and class, interest income that under investment source, you can actually deduct the expenses also. Those the interest expenses that incurred on the loan for secure the interest income. So maybe I earning this interest income is actually the investment money from the loan also, example, right? So I pay loan interest, I earn interest income, example. So then this loan interest I paid, I can deduct, right? So far I think it's only this one can deduct. Other than that, no more, okay? Okay, and class, if let's say this interest income is under investment income, then normally only one expenses in here you can deduct. Am I right? So let's say you actually finance the money to make investment to the fixed deposit example. Then fixed deposit interest you receive, then you can deduct this loan interest you pay. Am I right? So far only one expenses. But what if let's say the interest income is under business income? If let's say this is business income, then you can deduct all the business expenses already. You get what I mean? Because business income, you have a lot of different types of business income, like salary, rental, upkeep of motor vehicle, depreciation, blah blah blah, anything else, because they already putting under business source, right? So business will be entitled for more expenses actually. Okay. So, but if let's say this is investment income, I think so far should be only one expenses entitled. Now next, by the way, some interest income will be exempted from tax. So let's read on this one. For company, or actually for individual. Yes, highlight this one. Resident individual. And then highlight tax exempt. Now, so class, the resident individual receiving the interest income from the following institution will get tax exemption, like the interest you receive from a licensed bank or finance company. All those your saving account interest, fixed deposit interest exempted, right? But only for individual. So, or any money you put into the licensed bank under Islamic Banking Act. You know that some of the bank actually they have a normal bank and then also have Islamic bank, right? Now, do you saw that actually? Like CIMB Bank or CIMB Islamic Bank. Actually different one, you know, right? So because they are actually forced under the different act, okay? Alright, because under the Islamic banking rules, certain things you cannot do and so on, right, for the banking institution. Okay, and then any interest from development financial institution, Lembaga Tabung Haji, the Building Society Berhad, Cooperative Society, Borneo Housing Finance Berhad, and so on, right? All this you can invest your money and you earn interest on, okay? But all this will be exempted. Now next, look at this example. This company have two interests in here. And then class, I want you to just determine for me, this interest is under business or non-business source?
Business and non-business.
First one?
Business.
Interest charged on the trade debts. Is it business?
Yes.
Yes, business income. Alright, so the first one is actually business income, yeah? You charge on your trade debt. Trade means your business already. Okay? Second one, the interest on the deposit that you place with a licensed finance company. Investment. So you will say that this is a non-business income, right? And then look at the solution. You try to read it first. Alright, now first they say that the interest on the deposit placed with the licensed finance company, the 206,000, is assessed separately as an interest income, which means separate from the business. Alright, so that's why they are separately assessed as an interest income, non-business source, and therefore it is deducted from the profit before tax and added later in arriving at the aggregate income. But interest charge on the trade debt is part of the business income, right? This is what you determined just now, right? And therefore, no adjustment is necessary. I think it will be a bit confusing about the adjustment here, right? Let me just explain to you. But later on, you will study this in your chapter 4 and 5 also. Okay, let's explain to you. Okay, now class, why actually just now the solution will tell you something like deducted from PBT and then also add back, blah, blah, blah. Okay, this is a situation whereby usually the company will prepare a profit and loss. Am I right? The profit and loss, they will start from the sales. Okay, and then let's assume after the sales minus the cost of sales, and then you will get gross profit. Am I right? Now let's say this is a certain amount here, and then if let's say you have other income, then we will add here. So far here you have two interests, right? One is the interest related to trade debt, another one is actually the interest from, let's say, bank. Okay, just now is a financial institution, right? The amount for trade is actually 4,000. Another one? 4K and 206K. Okay, and then after that, of course, the company will minus, yes, all the expenses. Let's assume certain amount here. And end of the day, you will actually get net profit before tax. Alright? Okay, that is the end. Okay, but class, this is accounting profit, accounting income statement. But when come to the tax computation, alright, for tax purpose, we will actually need to calculate our tax computation, or you can say that we need to calculate the chargeable income first. We will revise the profit, right? Because certain things is allowed to deduct, certain thing is not allowed to deduct according to the tax rule, right? So we will do some adjustment. So class, based on the computation, we start from the profit before tax. Okay, now let's assume here is 1,000 just now. Okay, then we will also start here from 1,000. And then adjustment. Okay, you need to do some adjustment in here. Now the adjustment here, which means you must remove anything not related to your business, right? Or anything that the income tax said cannot deduct, cannot, no need to be taxed or whatever. This one you will study in details later on, right? So, but now here class, just now you told me that trade, is it related to business?
Yes.
But the bank interest, is it related to non-business? Okay, that's why now class, just now I said, adjustment here, we must remove whatever not related to business. So which interest now is not related to business?
Bank.
Yes, so the bank interest, 206,000, correct not? But class, this 206,000, should I plus or minus from my adjustment? Now you see, accounting profit and loss is that you already included this interest into your accounts, right? 206,000. Now, if let's say you want to remove out because not related to business, right? If you remove out, what will happen to your profit? Increase or decrease? Is it decrease? Yes. If let's say decrease, you have to minus. All right. Now, class, read again the solution just now. Can you see the word of deducted from PBT? And class, look at my example. Is it actually I really deducted from my PBT? Yes, I deduct from my profit. And further, after that, alright, come to the non-business income. Alright, then only we add this bank interest, 206,000. Okay? Alright, and after we add, you will get what? Yes, class, you will get aggregate income, right? Let's say certain amount here. Okay? Alright, and read again the solution. So therefore, the 206,000 is deducted from PBT and added later in arriving your aggregate income. Can you see now here, we also actually need to add later under non-business income? So this is actually the meaning for the solution. Now you get what I mean? Okay, now by the way, this is about the 206,000. How about the 4,000? 4,000 related to business or not? Yes. If let's say related to business, should I need to remove it? No need. So can you see I didn't do anything in here? Alright, so no, I didn't do anything here, so that's why they say what? Since the interest charge on trade debt is part of the business income, and therefore, no adjustment is necessary. So you see I didn't do any adjustment on that. I didn't plus or minus for the 4,000. Boleh faham, Okay, so class, this concept is very important, right? So how to do adjustment? Add or minus or no adjustment is need to do is very important for you. So this is just some beginning part only, alright? So we will talk about all this adjustment later on in chapter 4 and 5 in details. Okay, so get the basic concept in here first, alright? Okay, so that's all for the interest income. Any question? Okay, now one more income to go. The common one. Okay. Now next, let's talk about rental income. Okay. Now if you have a property, you rent it out, okay, and you earn a rental income. So how are you going to assess this income? Now class, this is under which section? Now rental will be accessible to tax if let's say this is an investment income. Okay. Let's say investment means it will fall under section 4D. But sometimes class, however, in 2011 onwards, rental income would be assessed as a business income under the section 4A, right? You can also make this rental income become a business income, but subject to, right? Look at that sentence. If, okay, this whole thing, if the maintenance or the support service are comprehensively and actively provided by the owner or through the engagement of others in relation to the real property. Now, which means all those maintenance and support, everything is provided by the landlord. Landlord means the person who rent out the property. Okay? So, now class, let's say I just have a property in Klang. Okay? I rent it out. Now usually, if let's say the house need to pay like maintenance fees, need to pay some kind like a service fees or maybe security fees and so on, do you think I paid or my tenant paid? Actually should be the tenant, right? Okay, so this is actually under non-business income, which means I actually just make an investment. Alright, I don't provide everything to my tenant one, so they need to pay for their own. So this is under the normal non-business income, right? But what if let's say I actually having the whole block of the condominium, right? Let's say I have 30 units of the condominium in here, and I rent out to all the tenants, okay? But because this whole condominium belongs to me, so I provide all the maintenance, all my support, everything to the tenant. So now I actually doing a business or just investment?
Yes, business.
It's a business already. Right, so which means I will provide everything to my customer or to my tenant. Right, so this situation is whereby the maintenance or support service are comprehensively and actively provided, okay, by the owner. Okay, if let's say falls under normal situation, that is actually non-business income. Alright? Now, so class, next thing we need to see is deductible expenses. If you rent out a property, what you can deduct. Okay, first, now sometimes if let's say you rent out a property, something damaged already, broken already, definitely the tenant will ask you to repair, right? Not because this is your property, not theirs. So cost of repair and maintenance can be deducted. Any fire or burglary insurance you buy for the property can deduct also. Cost of supervision and rental collection. Maybe you ask someone to help you to collect rental and blah blah blah, rental fee and so on, you pay, right? Can be deducted also. Cost of obtaining the tenant to replace the old tenant. So this tenant now don't want to rent already. So maybe I need to put on some bunting, banner, put on advertisement and so on to rent out the property, right? All that cost also can be deducted. And interest on the loan to finance the property. I borrow a loan to buy this house, right? So that loan interest can be deducted also. Cost of renewing the tenancy agreement. If you find a lawyer, right, to work out agreement to you, so that fees you can deduct. Quick rent and assessment. Do you know what is this? Never heard about that before. But do you heard about cukai pintu and cukai tanah?
Yes.
Any other? Actually, this is the English version lah. Okay, so actually this is the cukai pintu dan cukai tanah. Quick rent assessment. Okay. Security service. Right? Maybe you have a pay for any security service to secure about your house. Okay, you can deduct. Repainting of the rented premises. Can, right? So some kind like a repairing work also, because repaint, right? Make your property can be maintained for longer. Okay. So let's try a question. Yeah. By the way, one more thing. Now class, you have deductible expenses, but of course you have also some non-deductible expenses. You're not allowed to deduct one. So any cost to obtain the first tenant. Okay, initial expenses such as your advertisement, commission, legal expenses on first tenancy agreement cannot be deducted. The keyword here is first. Alright, so any expenses that first time you incurred cannot deduct. Because why? They say this is capital in nature. You haven't started to generate income yet, right? So all those first time expenses is something like setting up expenses. You get what I mean, right? So they're not allowed you to deduct for that. Okay, because you haven't started to earn income. No income, then how you can claim expenses? So they want a matching concept here. Understand? So first initial expenses not deductible. Okay, and next. Okay, temporary non-occupation. Now, once the rental source exists, the expenses incurred during the non-occupation period would continue to be deductible, right? But subject to this section 33 and 39 of the Act. Now, whenever you already created the rental source, now maybe temporarily class, January to June, I rent out, but the tenant stopped, okay? So I need sometimes to find a new tenant also, right? Now let's say the first tenant January to June rent out only rent this period, and then July, August I go and find another tenant. So these 2 months I didn't rent out, right? So and then maybe start from September I actually rent out again. Okay? So but class, during these 2 months, July and August, I have no rental income, right now? Then question, can I deduct my expenses on these 2 months? Read again. Can, alright? But of course, you must make sure that the rental source are still exist, still continue. Alright? Then you can actually still continue to claim. So you can say that July and August, the example that I mentioned just now is temporarily non-occupation. No one occupied the property. Okay? Alright, and then plus also one more thing. Advance rental. What is that means? Advance payment, right? Okay, so maybe December you already pay for January and February rental. Okay, so and then a question, should we actually also charge the income for the advance rental that we receive, right? So rental received in advance are accessible in the year of receipt. Okay, once you collect the payment, straight away taxable already. But previously, it's not. Previously, actually, we follow matching concept. So which means, let's say December, I collect the rental for January and February already, but I'm not going to charge on December. I will actually follow the period, right? January and February, okay, that rental you will declare in January and February also. But now they change already. Once you collect, you charge for tax. Okay, so advance rental will be also accessible, notwithstanding that it may be subject to refund. Even though maybe in future it's subject to refund, but this advance rental still charge first. Alright? If you refund in future, then you can claim back. Okay? Now, so this is about an individual that rent out the property, Peggy. Read the question first. Okay, Peggy provide the following information regarding her residential property in Subang for this 2018. Now she received January to March rental 16,000, but April to May no rental. So subsequently June to December rent out again, so 24,000, and received some rental in advance also 4,000. So deposit. So class, usually when you rent out the property, you will get deposit also from your tenant. Okay. Generally in the market, they will collect 2 months rental deposit, right? So which means 2 months first, and also collect 1 month deposit for your utilities, right? Which means your water and electricity bill or whatever. In case you run away, right? At least I hold your deposit, I can pay for that, right? So this is actually for secure purpose, yeah. So, but usually if let's say you rent, the tenant actually always pay the rental on time, also pay all the water and electricity bill, then in future you must refund back the deposit once they stop, right? So here, they should receive the deposit that refundable in future, 26,000. Receive also utilities deposit, 4,000. And then the payment, there is a deposit refund to the ex-tenant when they stop rental. And then assessment you also pay 4,000 too, and then quick rent you pay for 2 years, 2017 and 2018. Okay, now class, let's we just discuss first, yeah, the deductibility of all these expenses. Can deduct or cannot deduct? Alright. Now first of all, deposit refund to ex-tenant. Can you deduct as expenses? My answer is no, right? Now let me tell you first class, the income, right? The deposit that you received just now, right? This is not advance rental, this is deposit, right? Now usually the deposit that you receive, okay, is not taxable because why? Deposit is not your actual income. You are just holding the money. You get what I mean? In future, you will pay it back, okay? So this actually is not subject to tax. Okay, so this deposit you receive is not your income yet, you can say. Alright, so that's why it's not going to charge you for tax. And same thing also, in future when you refund back the deposit to your ex-tenant, you cannot claim also. Understand? Alright, so because this is not your actual income, not your actual expenses also. But advance rental is different. You will receive in advance, but actually that seems like your income already. Unless the individual suddenly don't want to rent, then only you might subject to refund. Understand? Alright. So this deposit refund to ex-tenant cannot deduct as expenses. Assessment? Yes, can deduct. Quick rent? For 2017? Yes or no? No, cannot. You know why? Because this is year 2018, right? You cannot claim your previous year expenses to this year, not matching. Okay? And then 2018, quick run, then this one can. Interest on loan? Yes, you can claim. Penalty of the late payment of quick run? Penalty. Penalty cannot. Alright? This is actually your wrongdoing, right?
Yes.
So supposedly you're not supposed to incur that penalty also, right? But because of your non-compliance and so on, alright, that's why you're subject to penalty. So of course the income tax will say that is your problems, right? You cannot deduct. Okay. Repair that you carry out in the month of May, you repainting deductible?
Yes.
Yes. Renovation? Renovation or repairing?
Repairing.
Actually, class, renovation and repair is different. Alright? Actually, okay, if let's say without repair, maybe the property really cannot be used, right? Or maybe cannot be occupied anymore. So you must repair. You maintain the existing condition, right? You want to maintain the good condition to be continued to use, right? But renovation, upgrading, improvement. Even though no renovation, actually the properties can be still occupied, correct? But just that maybe if you renovate, the value increase, right? So and then maybe you can increase your rental some more. Okay, that is actually the example. But this is not to maintain your existing condition. You get what I mean? So renovation is capital in nature. All right, it's actually capital expenses. Any capital expenses cannot deduct. Okay. Then how about replacement of the damaged house?
Yes.
Can, right?
Yes.
Okay, yes, because the tiles already damaged, you must replace, so you can deduct. It's a repair cost. Install for account? Yes or no?
No.
Why no? Account is actually asset also, right? Yes, asset is capital expenditure. Alright. Now class, actually when you study about accounting, I think you know how to categorize revenue expenses and also capital expenses, right? It's actually similar concept in here. Alright. So income tax will allow you to deduct any revenue expenses but not capital expenses. Okay? Alright, and now class, you should, one thing in here, make a correction please. This is YA 2018, not 17. Okay, under the required part, please amend this one. Alright, so please correct this, 2018. Then now class, they need you to calculate the adjusted income from your business, from your rental source, right? Adjusted rental income. Okay, just prepare two value column here. Alright, now class, you can try yourself first, okay? Just list out all those amount received, right? And this one also including the deposit, the deposit that refundable, and also the utilities deposit. Okay, and you will minus allowable, or just mention minus expenses. Okay, so now class, you just fill up the amount. Okay, so for those the amount is subject to tax, you just fill in. Not subject to tax, you just mention nil. Okay, so try first. So far class, this is the income part. Okay? So the deposit is not taxable, so you just write as new. Okay? Because this is actually a capital item. You will in future also must be refunded back. Okay? Not your income yet. So and now expenses. The deposit refund to external, you should write as new also. Assessment you can deduct, so 4,002. Quick run for 2017 and 2018. Now 17 you are not allowed to deduct, and then 18 okay. Interest on the loan, no problem, 8010. Okay, that is the loan interest also incurred on that particular period, right? January to December. And your rental income is also January to December, and then here penalty. Yes, you cannot deduct. Repenting is on the, okay, so 650. The renovation work you cannot deduct. It's a capital expenses, yeah? And then the replacement of damaged house. Okay. 3750. Now one more. Installation of accounts. Right, the amount is 1150, but you cannot deduct here. So far, that's all for the expenses? Yes. All right. Okay, so the total allowable expenses, 19,000. Okay, and then this will become your adjusted rental income. Okay, that's all. And class, so this adjusted rental income, if this is actually for the individual, right? Let's say this individual also earning other income like salary and so on, and of course this rental income you will add in into the chargeable income computation, but you will add in under non-business income, right? That part, right? You will add in under that part. But what if, let's say class, you get adjusted rental income is negative amount? Is it possible? No. Means rental income must be definitely a profit. Then everyone will also go for rental income already. Yeah, if let's say your expenses is over, then your rental receipt actually possible also, right? Yes, maybe some of the area your rental value is really not much. Okay, the market value you can only rent for a very low amount. You still need to rent it out, correct? But expenses may be a lot, right? Okay, now class. So when you're actually getting adjusted rental income as negative, a loss here. So what you're going to do in the chargeable income computation? No need to add. You still need to show that item in your computation, but the amount will be nil, right? 0. Okay, so which means no income from rental. Understand? In your CI computation, so rental you will just record as 0 if you get negative amount. But the loss, can you carry forward? Cannot. You cannot do anything. That is the way you continue with your CI computation. Alright, if you get negative amount. Okay, Alright. Class. Actually, we have also some other non-business income in here. Now this is actually another 6 type of income that I show you. You can try to read on your own. Okay, so this one you can read on your own, but this is not so common. Okay, in your exam question mostly is interest, rental, and so on. But doesn't mean that all these things never test here, but just that very seldom. Okay, so you can read the notes on your own for this one. Now, and so we end the chapter in here. Okay, let's take a break. And class, come back by 11:55, yeah? Now my time is 11:41.